Good afternoon, Outliers. Happy Wednesday to you. I hope your week is going fantastic because we are almost to Thanksgiving. And I am going to be so thankful because I'm going to be out all next week. I want to make sure you are also planning to be out all next week, right? I remember there was one time I traded on Black Friday. Listen, I've done all the mistakes. If you want to think of a mistake in trading, I've done it. Okay. I remember one year I was trading on Black Friday and I went out shopping with my family, as you do on Black Friday, right? And I was just stuck in my phone the whole time, right? I was stuck on my phone looking at my positions. Not that I was making any money, but more the fact that I was trying not to lose money was really what it was. But I remember walking around the mall, going up the escalators, down the escalators, in the stores, out of the stores. And my wife, she's like, "What are you doing?" "I'm trading." And she's like, "Can you not do that right now?" It's like, "But I got to make sure." Right. And generally Black Fridays are like half days. And so, yeah, like just don't trade next week. Liquidity is most likely going to be low, which when liquidity is low, things generally move faster. Why would that be? That's because in an open market, if you've got as many people showing up as possible, right, you're able to find the buyers and the sellers without having to go very far, right? If there's a million people here, I can probably find a buyer of this pin, right, pretty easily. Okay. But if there's 1,000 people here, it's going to take a lot more work for me to go and find a buyer of this pin. Okay. So whereas if there's a million people, I may be able to sell it for $1, right? Maybe, I don't know. It's a pretty good pin. I like these kind of pins. It's the Bic Atlantis Exact, right? It's what I use. I really like a fine point pin. And if there's a million people in the room with me, I could probably find somebody who also would like this pin. And I could probably sell it for $1. But if there's only 1,000 people and it really doesn't have all the features that this person is going to want, I may have to sell it for 20 cents, right? Same pin, but because there's less people in the market, the price is going to have to move a lot more. So on low liquidity days, like what's going to happen next week on Thanksgiving week, prices are probably going to move more than you're used to seeing. I'm not saying that you're going to see huge up days and huge down days, but on a day where the SPY may have gone 10 basis points, it might end up going 3, 4, 5 times that. You never know, really. So at the end of the day, managing risk is paramount. Before anything else, managing risk is paramount. So good to see you, Dave. Goran's here. Michael's here. Jean-Louis here. Mikey Mike is here. Other Michael's here. There's so many Michaels here. Randy's here. Tug is here. Good to see everybody. Mahesh actually asked me earlier today in our weekly meeting. He said, "What do you think about buying a call and buying a put on NVIDIA going into earnings?" And I said, "What are you trying to do here?" And he said, "Well, I don't know if it's going to go up or if it's going to go down, but it's probably going to go one way or another." This other guy named Brian decided to show up. Good to see you, Brian. He said, "It's probably going to go up or down, probably by 10% or so. And I want to make sure that I can profit on it." And I'm like, well, first, buying at the money calls. Brian, you read my mind. Does Mahesh not listen to this show? Buying at the money calls is a very difficult trade to profit on. So instead of doing any politics or any news like that, I want to explain this. And this will really help our newer members like Mikey Mike to understand this a little bit more. So let's do options straddle, long straddle. Okay. Oh, yeah. Wonderfully tiny image. Thanks a lot. Give me a different one. Hang on. We're going to find a beautiful image. Just give me 10 seconds here. I should have done this already. Actually, let's go with this one because it'll make my point. Oh, I don't want to download it. Hang on. Open image in new tab. Why does it keep downloading? Open image in new tab, and it downloads. The frick. Yeah, let me go to my downloads folder. All right, so now we got the image. So this is what a long straddle looks like. Let's set the stage here. So we're looking at NVIDIA. NVIDIA is currently at 144. We're just going to round it up to 144. If we go into the options market for NVIDIA, you can do anything, right? You can do all kinds of stuff with options. But what Mahesh was specifically talking about is buying an at-the-money straddle. Now, an at-the-money straddle says that the current price, let me draw on here exactly, 144. Current price, 144. Okay, that's the current price. Now he's saying, listen, if it goes up 10%, or if it goes down 10%, then I'll be profitable. And I'm like, Mahesh, this is a hard trade, a really hard trade. Now, first way that this is hard is you're buying both of these, okay? So if it's going up, that means that your put value needs to go to 0. So you have to basically completely wipe off the put. You have to move more than the amount of the put. So if your put's $5, you've got to move at least $5 to break even on the trade, which makes it hard. Or the opposite's true. If it's going down, you have to make up enough to offset the cost of the long option there for the call, which makes it difficult as well. So that on the outset makes it difficult. Now, whenever you go to the options chain, as you know, I talk about spending as least amount of extrinsic value as possible. If you go to the option chain and you buy an at-the-money call, we're just going to price it out, and buy an at-the-money put, you'll notice that the extrinsic value peaks right there. The extrinsic value is highest at the money, right? So therefore, not only do you have to offset the cost of one of these going to absolute 0, but you're now paying the most in value that will go to 0 on either one of these, on both of them, really. So then when you price this out, let's lock it down. Let's say it's $12.80. You have to overcome $12.80 on the trade. So what do I mean by that? To be profitable at all, whatsoever, this trade has to go from 144 plus 1280 or minus 1280, assuming it holds to expiration, which means it's got to go from 144 plus 1280 or to 156, so 156.8. Now, you usually say 85% of that number of the 1280, but for simplicity's sake, we're just going to use at the money number. And then 144 down. 144, sorry. 144 minus 12.8. So 131.20. So this trade has to move $12.80 either direction to break even. To break even, okay? That's nearly a 10% move either way, just to get to the break-even point. Now, if you want to find the actual expected move, you would take that and then multiply that by 0.85, like I was mentioning a minute ago. So 12.8 times 0.85. So $10.88 is the expected move that the option market makers have created. So what does that look like on the chart? There you go. Right. So if it's at 144 and change, it's got to go up this high or down this low to break out of the expected move. But you're not guaranteed profits once it gets outside of that expected move. You actually have to go even further, which was 1280, right? Yeah, you got to go 1280 just to the break-even point, okay? So that's just to get past the expected move, and then the break-even point at 1280 is right there. So it's got to go even farther. which of course makes that even more difficult. But I'm going to throw another reason that this is difficult, because we're just talking about delta moves, right? We're just talking about delta moves, meaning like price of the stock movements. We haven't even discussed the volatility move. Okay. The reason that these are so expensive right now, this is the most closest options chain you can get to earnings. The reason that this is so expensive right now is because we don't know where it's going to go, right? And Nvidia, being a one of those high flyer stocks, one of those exciting name stocks, it could totally go up 10% or down 10%, right? And the option maker, the market makers for these options aren't stupid. And so they say, well, if you're going to do that, I'm going to price these up as expensive as I possibly can and still find a buyer. So that's why the extrinsic value is so jacked up as it is, right? $6 on this side, $6 on that side. But the day after earnings, right? So option prices are up here because of the unknownness of what's going to happen with earnings. The day after, we know what's happening with earnings, right? It may move $1. It may move $25. Really doesn't matter the day after, because you're buying all that uncertainty. You're buying all that extrinsic value. But the next day, all of that extrinsic value goes away. All of it. By the end of the week, all of the extrinsic value will be zero. So you may be looking at, they call it the volatility crush, right? Because you don't know what's happening before the earnings. So they pump up the volatility, they pump up that extrinsic value as much as they can. Then they know the moment after earnings what people are going to do. They crush the volatility. So going from $6 a contract, right? Tomorrow morning, that may be $1.50. That may be $2 a contract. Okay. Now, of course, assuming all things being equal, that will absolutely destroy your trade. I mean, if you spent $6 on either side, and then it crushes down to $3 total, so $1.50 on either side. What is that? Like a 70% loss instantly? So smart traders realized, you know what? If that volatility crush is going to happen, why don't I sell the options, right? And so that's the opposite end of the spectrum. That's the short straddle. So buying the options makes it so you profit if the price goes way up or way down, but you lose potentially a lot right in the middle. But the short straddle is the opposite, where if it doesn't move all that much, you can benefit from the huge volatility crush. I used to trade these. I don't anymore, because you're not guaranteed either one of these outcomes. And I have lost big money on both of these outcomes, where I sold it thinking it was going to have the big volatility crush, no big deal. But not only did it have the big volatility crush, but it also moved hellaciously one way or the other. And then I'm out tons of money. Or, right, buying the long straddle thinking, hey, this is going to be a huge move. And then the nothing happens, the nothing trade. And then it's like, I just got murdered by all that extrinsic value. I don't like to trade earnings. I do have rules to trade earnings, and it's only the long option, only deep in the money. If it only fits everything else I'm already doing and I'm already profitable on the trade. Is the trade already profitable? Yes, cool. Does the expected move, which we just talked about, break the trend line that we're following? So generally it's a 10 EMA. It's usually not anything else. So if we go and look at this, would that break the 10 EMA? Oh yeah, handily. Right? It's right on top of the 10 EMA, in fact. It would destroy the 10 EMA if it went down. So if that's the case, does it break the expected trend line? Yes, I get out. But if not, you can hold it through earnings. Now I'll tell you, earlier this year, I traded Bank of America leading up into earnings, which I have no problem doing. But I didn't know earnings was happening on the day of until 3:03 p.m. Central Time in the trading room, when someone said, hey, we have earnings right now on Bank of America. And I was like, what? I would not have held that trade. Turned out to be great. I was up, very handily in the trade. Wonderful trade. Huge trade. It was tremendous. It was the greatest trade you've ever seen. But I wouldn't have made that trade. So either way, I wanted to share Mahesh and we chatted on it today. And he's like, hey, you should talk about this in the show. Yeah. I am an absolute nerd. I love trading so much. This is my jam. And you could be my jelly. And together we can make an incredible peanut butter sandwich. But I could talk about this all day. So if you guys have questions, drop them in the Discord and we can go down all the rabbit holes you'd ever want to know about. Michael says, with all that said, let's go sell some naked positions. Yeah, I'm done with that. I am done with that. I'll never do that again. Is Mahesh not listening to the show? Exactly. I used to do strangles, but their premiums are too high now. So a strangle is a little bit different. Randy, did you buy the strangles? Because I was selling those strangles to you. That's why I was asking. Options, strangle. So similar trade as the straddle, except instead of buying 2 at the money, let's say, if it's $150 at the money, instead of buying $250 or one $150 put, $150 call, buying them maybe $5 out. So it was, the 155 call and the 145 put, which absolutely does make this difficult. But you can, and I did, have a very high win rate from the times where options short strangle. You can have a very high win rate if the stock stays in this range here. But it's the 1 out of 10, 2 out of 10 occurrences where it goes beyond those points where you just get destroyed. And that's exactly what happened to me. And that's exactly why I don't trade those anymore. Sebastian's here. Brian says, Mahesh could use an iron condor and hope it stays within the range. Precisely this, right? Let's do iron condor. So to Brian's point, he could do an iron condor. Yeah, I'm trying to find one that's not so busy. He could do an iron condor as long as it stays within that expected move, and then the IV crush would come through, and he would make money from the IV crush. This is a pure IV crush play. You're not looking for any sort of delta move, but as I've said before, your losses are tremendously larger than your potential gains. So let's price that out. So if we did an iron condor, and let's say we went outside the expected move, Tastyworks does make this handy. The expected move is this like orange bar right here. So let's say we sold the puts. So let's say we sold a $5 wide put right at the boundary of that. So 133 to 127, $5? No, 28. So this is $5 wide. And let's say we did it on the calls too. We're here. We sold this one. Bought the 162.5, right? So that's a $5 spread. And actually, that is pretty crazy. Generally, on a iron condor like this, you might be lucky to get 20% of the total width, right? So here, this is $5 wide, and yet we're getting almost 50% of that as the credit. That's really good. Brian says, use a 12 delta. Let's do that. I go to a 12 delta. 165, 170. And 128, 123. 86 cents. So the most you could make, let's lock it down. The most you could make is, we'll round it, 90 cents. The very most you can make is 90 cents on this trade, okay? But the most you can lose is the difference in the spread width. So this is $5 wide. So $5 minus 90 cents is $4.10. So you can lose more than 4 times as much as you could win. That is not a trade that is skewed with a positive risk return there. So definitely not one that I'd be looking to make. Won't the people who purchased NVIDIA around $80 be waiting for it to spike and exit their positions, thus pushing their price down after earnings? Totally could. That's kind of the context of the order blocks, Brian. I think I turned those off. Let me turn them back on real quick. And an order block is an area where stock has already gone to. And as far as I know, NVIDIA's not been up this high before, has it? Well, it definitely has it ever, it looks like, yeah. So there shouldn't be any order blocks above. Well, there is an order block right above where current price is right now. But let's say, for example, it pops up to 155. There's nobody up here waiting to sell to push it back down. That's kind of the context and how order blocks work. Randy says, yep, made money, made great money years ago before the market makers went crazy on premiums. Yeah, dude, for sure. Okay, so that's going to wrap that lesson right there. I hope that was useful. Let's go over to our market analysis now. All right, welcome to the Outlier Trading Room. This is smart trading made simple. This is where we save time, make money, and start winning with less risk together as a team. And for those of you who don't know me, my name is Christopher Yule. I've twice been awarded Top 100 People in Finance, been successfully trading since 2009. I'm a partner with Outlier, and this is my side of trading using the Outlier data. I call it the golden ticket trading strategy. And real quick, how does Outlier work? It's a 4-step process. Outlier monitors how investors are reacting to changing market conditions, news, price movements, and the economy. And eventually, I'm going to have this memorized. Outlier determines if investors are acting irrationally, fearful, or greedy, and by how much. Number 3, Outlier gives buy and sell signals when these irrational behaviors reach an extreme. And number 4, allowing you to get into the Outlier move before it happens. So let's take a look at today's member highlight over in the Discord. All right, so jumping in the Discord, see Brian made a little bit of money this week. Way to go, my dude. Mahesh was saying, I keep telling everybody to start paying closer attention to the news feature that we introduced. Can provide some real support to existing data. So if we go look at ELF real quick, since is ELF on here? No. Since you mentioned it, let's load up ELF and go look at the news feature that Mahesh is talking about, because it's actually really stinking cool. So over here in this section, by the way, new improvements are coming shortly. Mahesh and Mark and I were having discussions on it today, so those updates should be rolling out pretty quick. This news feature up in this corner is super handy, right? You've got your news, then you can expand it and see all of them. And it'll even tell you what the sentiment behind it is, right? Negative, neutral. I thought that was super interesting. So that's really good. And then you can go over to the sector. So this is in the staples, consumer staples sector. And you can see different articles talking about the staples sector. I find that super interesting as well. And then you can even look at the analyst ratings. So pop this open. You can see the analyst ratings, who they're from. It shows their change, if there is one, and their current rating, and even their price targets and the date that it came through on. So look at this price target. 210 got slashed to 130. That was on October 16th. That's a huge price slash right there. But they still have it as a buy. I don't know. Either way, this is a super handy feature. So I'm glad Mahesh mentioned that. Go over here to the general. So Jean-Louis, he did something really cool, and I wanted to talk about that. He has a Thinkorswim script that he wanted everybody to take a look at. So I don't have Thinkorswim, so when I click it, it doesn't do much for me. It just shows me this. But the labels, hang on. It calculates your ATR based on yesterday's close. It computes levels for half ATR, 1 ATR, and 2 ATR, and labels to display them. This is super handy. And so actually, Jean-Louis, I took your inspiration and I was like, oh, I should make that. So TrendSpider has a custom indicator editor, and I put in what I wanted to see in ChatGPT. And I used ChatGPT for the first time to make my own indicator. Let me show you guys. Absolutely inspired by Jean-Louis. So I think I can share this over too, but I called it outlier bullish ATRs and outlier bearish ATRs. So for example, if I were to go long on NVIDIA and I click bullish ATRs, this jumps on the screen. It looks scary. It looks terrifying, but all I really care about is the current point. So let's say I want to get in, right? So today I could go and add my opening spot. I can add my half ATR spot. I can add my 1 ATR spot, my 2 ATR spot, and then I can turn that indicator off. Wrong one. And then I've got all of my notes on there, and it took like 5 seconds. So Jean-Louis, thank you for sharing that for the Thinkorswim platform and giving me the inspiration to go and add that for what I'll be doing. So you all will be seeing this every chance that I get. So I really appreciate that, my friend. Randy says, nice. Dave says, that's awesome. Been working on a few scripts as well. Hey, we should create a Discord area for that. Very cool. I like that idea a lot. That ChatGPT, I mean, it did literally everything. There's no way I could have coded that. So that was super cool. So if you guys are working on your custom codes, try using ChatGPT. It can help a lot. I have flexible chart in TOS for outlier analysis. Very cool. Michael says you can use GPT the same thing for trading view. Look at that. Dude, we got things so easy. You guys realize ever how easy things are for us? Think about that all the time. Mikey Mike also had a serious question. How many of you make your living strictly by trading? My reason for asking is I was going to purchase a business that is cash flowing, but it still needs a facelift, some significant effort to get it where it needs to be. The owner, who is younger than me, is just tired of the business. I don't know at 63 years of age if I still have the drive to crank up a tangible product type business, but that's for me to weigh out. I'm considering going full in on learning and practice in trading, just looking from some input from my outliers. So Mahesh piped in and he said, just my 2 cents. If you're getting started and do not have years of trading experience, just be careful making trading a full-time profession. You're going to learn a lot. In fact, you will get to know better. You will get to know better when presented with extreme situations in the market, which may lead to gains and losses. I know some people who are full-time traders. They definitely have very good experience under their belts and an extremely large portfolio. They're able to make decisions around their risk. And I know this trader has over 10 million. 98% of the time goes into boring stuff, including index rebalancing, some mega caps, and only 1 to 5% will ever touch options. Bottom line, depends on the situation. So I piped in and I said, I would absolutely not plan on trading for income. Now, this is just my 2 cents here from what I've seen. And I've mentioned this a few times here. Trading for income is a very different mindset than trading for capital allocation. What do I mean by that? There's zero guarantee you're going to make your monthly minimum in any 1 month. People call it their nut, right? If you need, let's use round numbers. If you need 10 grand to get by in a month and you don't make 10 grand that month, what are you going to do? Right? You could have 5 months of absolutely nothing. You could have 5 months of losing. Could you get by with 5 months of losing? After 5 months, what would that be? Like 150 days. Would you actually be like, oh yeah, I'm doing something right? Probably not. It would suck. But then the 6th month, you could make back all of the money you need over those last 5 months all at once. All at once. That is how trading goes. Relying on trading for income, in my opinion, is extremely highly stressful. And the learning curve is steep. The general rule of thumb is year 1, try not to blow up your account. Year 2, try to blow out your account even less. Year 3, just try to break even. Year 4, try to post a profit. And year 5, you're probably profiting by then if you've lasted that long. And it sounds like a long time. Nobody goes to medical school for a couple of months and then comes out a surgeon, right? Just like anything meaningful, it takes time to master the skill. And me personally, I have multiple streams of income. I talk about it all the time, right? Do consulting and all kinds of stuff. Trading is used solely for capital appreciation, right? How big can I grow my accounts? That is how I trade, right? I don't plan to take this out. I plan to have generational wealth locked up in my bank, but I don't plan to try to catch a nut every month, right? I have other ways that I can catch my nut because it makes it really, really hard to plan on a certain amount of income every single month when it comes to trading, because you really don't know. You can't budget that in, right? There's no way you could set a budget around trading for sure. Mikey Mike also was talking about how he really appreciates social interactions. Miraculous said, even if you become successful in trading, he still enjoys working and the responsibility and social aspects that comes with it. Chris helped him out teaching a lot about trading before the market closed, so he's not stuck looking at his phone all day, even though he's tempted to check out his positions, which I totally get. There's a little bit of chat coming through here. Hang on, trying to catch up on the chat. Dave says, I love ChatGPT. Very cool. Michael says, let's go trade some naked positions again. Thanks so much for the time cutting part of the process. Absolutely. Jean Louis says, you're welcome. Brian says, did you say you store the TrendSpider ATR data in the Discord? No, but I want to. Hang on. Let me see if I can share this as an indicator. I have no idea if I can share this. Indicator, and then I call the outlier. How do I share this? See the source code. You have not saved your changes. That's fine. I could probably just share the source code over, and then you just add it in as a share this script. That's what I wanted. Bam. Share. All right, dropping this in Discord. Just a moment. Here's the long ATR and short ATR scripts for the trend spider indicator. Okay, so long, this one, no, not that. How do I copy? Oh, there it is. Copy right there. And short. This is handy for sure. Close that. For ATR. Share. Share. Copy. And paste. I like them apples. That'll work. I'll reference Catching My Nut anytime I want to, Brian. Okay. Use the business to fund your learning until you trade. Yeah, that'll work. Build up and use house money. Brian says, you're so old school, Chris. The salespeople tell you that you can do it with their program. How could they be wrong since they're selling me their services? Dude, give me a break. Yeah. And that's why I say you can do it, but there's no guarantees that you can do it. Right. I mean, we had 4 or 5 months in a row, winning months in a row, which that was awesome. But November is going to be a losing month for me. What would I have done if I needed to count on November's income? Exactly. That's why I say don't use trading for income. Use trading to grow that account to as big as you possibly can so you can go off, buy your yacht, sail off to your mansion, and never have to worry about it again. That's my opinion. Jason says, great advice on not using it for income. All right. Very cool. Very cool. You got the scripts there. So let's move on. Of course, be sure to share your stories. Anything else in the Discord? There's no time to trade today, of course. There's no trades to be made, but I need you to tell everybody about Outlier and hit the like button. So let's go take a look at the market real quick. We covered a lot today, but we're not done just yet. Let's take a look at the market. SPY, hold on, close this. SPY is actually going to close up on the day, if you can believe that. Right? When did this happen? The last like 10 minutes, probably. Look at this. SPY is actually going to close up on the day. Now, my rule is to wait until it closes above the 10 EMA to trade, which it's going to do that, it looks like. And then if I go to the market breadth, which is the next step, market breadth has turned. It has gone sour. It is going south, right? We go to the watch list here real quick. You can see it's crossed under the 10 EMA, meaning that breadth is pulling back in, meaning more names are going on to the sell list than names going on to the buy list. So we've got 13 new on the bear list today, 2 new on the bull list today. So this is a time to just sit out and wait and learn and grow, right? Be ready for the next set of trades when they do come through. So we still got a little bit of time. Let's jump over into New Trader, Rich Trader. And for those of you who are following along, I've been going through this chapter by chapter. I read this book ages ago. First way I read it was on the Kindle, so that's what I got pulled up on the screen here. I would highly recommend you go get a copy of New Trader, Rich Trader. It doesn't cost me anything or doesn't earn me anything, but it might be the best $8 you ever spend. Oh yeah, plus they'll want $5 grand for the program as well. Outlier equals 81% wins, which equals 81% amazing. All day, baby. jumping off. See you later, Dave. I want to talk about new trader, which trader with you anyway. Hey, chapter 12. New traders hop from system to system the moment they suffer a loss. Rich traders stick to a winning system even when it's losing, and that can be tough, right? Take losses as feedback. Take losses as feedback. Some of us have to make money somewhere. So do we send that? Look, you can send that to me all day. You have to take losses as feedback, but that doesn't mean that what you've been doing is broken when you have a string of losses. Losses happen, but sit down, observe, and say, what happened to the stock individually, to yourself? Maybe there was some trading psychology lesson, to the market as a whole, maybe the sector, something you can glean information from, right? So it says, I currently utilize a trend trading system that uses stock indexes. The system is only adjusted in the first or last hour of the trading day, and only if I get a signal. So don't do a dang thing unless you get a signal. In my opinion, trend trading has proven to be the most effective way to trade. Disciplined traders can make money trading any system with an edge, but traders without discipline can't make money trading any system because they're unlikely to follow it. They'll try to judge signals instead of following them. They'll try to predict the market instead of following what the price and volume are telling them. Now, when he says trend trading has proven to be the most effective way to trade, you could do anything with trading, right? For example, let's just go to the SPY real quick. You could say that when the market's up, I'm going to go short. I was that guy, and it sucked. You could say when it pops over a moving average, I'm going to go long. When it pops under a moving average, I'm going to go short. Whatever, right? But trend trading is basically when the market's moving in a direction, when your stock is moving in the same direction, when the sector is moving in the same direction, that is where the trend is going, right? Don't fight the trend. Just get on your surfboard and ride the wave. Let's go to the next page. Find a style of trading you're interested in and feels right to you, and learn everything you can about that style. Develop a system that is historically profitable. Develop a watch list of stocks or ETFs that have the characteristics that will make them good candidates for your system. And test it on paper for a few months so you can actually have confidence in it, right? You got to believe what you're doing is going to work through different market cycles and see how it performs. So once you're convinced, once you believe that it's going to work, it's a winning system. Begin trading with small positions, just enough to be profitable and cover commissions. Slowly increase your position size as you start to understand all the moving parts of your system. Yorn, one of our regulars, he asked me one day, he had a deposit that he wanted to put in and start trading with it right away. And I said, Yorn, I wouldn't jump all the way in with that. And here's why. Let's say, for example, you get a $500,000 payday, right? Maybe some inheritance, maybe you sold your house, whatever. And you do plan to trade with that $500,000. I would suggest taking it slow, putting in 10% at a time, 20% at a time, trading with that for a month and getting a feel of what that feels like, right? You're going to be buying a lot bigger positions. And also, when you get those wins, they're going to be a lot bigger dollar amounts. But when you get those losses, they're also going to be a lot bigger dollar amounts. And if you go in and you go from 50,000 to 500,000, the wins are 10 times bigger. You're going to feel 10 times better. But when those losses are 10 times bigger, that's going to feel really bad, right? So whenever you start trading, I always tell people, layer it in, right? There's no rush. Once you get to your full size, you're going to be golden, but you need to adjust to that, right? So for example, I lost 60 pounds over the last couple of years. And when I look in the mirror today, I'm used to what this looks like, okay? But if I had gone from, 250 to 190 overnight, and I look in the mirror, I'd be like, whoa, this is crazy, right? And I may not know how to deal with that, right? I may be wearing the wrong size clothes. I may be eating too much or too little, right? I would need some time to adjust. And the same with your trading account. Don't go from 50 to 550 overnight without taking that time to adjust to your position size. Let's see what this says here. Journal your thoughts and feelings as you trade so you can learn what causes you to over or under trade or not follow your system. The winning percentage I guess these are things you need to put in your journal. Pulled out a blank worksheet and explained each line new trader. Winning percentage, wins divided by total trades. Payoff ratio, largest winning trade, largest losing trade, average winning trade, largest drawdown, et cetera, et cetera. These are things that you can calculate if you're up to. Here's my personal trading methodology. I like trading systems with limited screen time. That sounds familiar. I prefer to make trading decisions in the first hour and last hour of the trading day and not waste time glued to the screen. I prefer using a system with end-of-day signals for entries instead of day trading. I think it's like Steve wrote this, and I literally listened to every word he said. Often, the best exits lock in profits at the open, which I don't trade at the open because I don't want to deal with it twice a day. That frees up about 30 hours a week for backtest, chart studies, reading, enjoying life, maybe even having a job. I like systems that trade above the level of random price noise and look at the bigger picture and the long-term trend. I smile because I just identify with everything on here. I prefer to trade price action rather than attempting to make sense out of financial headlines or the opinions of others. I prefer simplicity over complexity. I've been profitable over the years using only moving averages, RSI, which I don't trade with, and price action to capture trends. I like to limit risk exposure to only 10 to 20% position sizes. So position size is not the same as risk size. We've had that discussion before, right? A 5% risk size may be 15% of your position size, etc. You'd have to calculate that based on ATR and everything, but beyond the scope of this. But the point is that you're not putting 100% into anything. I'll take a bigger position in a diversified index. My favorite signals are oversold price levels extended far from the 10 EMA or near the 30 RSI. I like breakouts of price bases to all-time highs. Remember, we talked about how all-time highs are bullish. And a moving average crossover system with the 10 trading over the 50-day. 10 over the 50, right? It's one of the things we talk about. I don't have a portfolio of stocks. I have trades and trading systems. Exactly. I don't have a portfolio of stocks. I trade when there's something to trade, and I don't do anything when there's nothing to do. And I would definitely say the same would work for you. So thank you so much for coming to today's Outlier Trading Room. I know we covered a lot today. I hope this was useful, right? I want to pay you back by helping you save time, make money, and start winning with less risk together as a team. Don't forget, Black Friday will be, I think it starts this Friday for us. We have a incredible deal coming your way, the lowest price that you could ever get the annual plan for. So I want to make sure that if you have the monthly plan, that you migrate over to the annual plan, because you are going to save so much money. Let us know if you need anything in the Discord. And of course, tell everybody you can about Outlier. Hit the like button and have a fantastic afternoon. We'll talk soon.